This is the first property that literally stressed me out. Stressed me. I said a prayer, I say, God, you got to take this one. I can't do it no more. I'm done. I'm done. When you acquire a property personally, not only do they want to see your closing costs sitting in the bank, they want to see 6 months of reserves. So that means if the mortgage is $2,300, I have to have that times 6. You've been following me online. You know that I'm a real estate investor. I'm a business credit consultant. Mr. Darren Finley, Fly Book, SBU. Come check us out. SBU is Silverback University, the apes in the room. Don't forget it. Hey, so when you acquire a property traditionally, when you acquire a property personally, you know what I'm saying, a FHA, a conventional mortgage, you're going to put it on your personal credit report. You're going to put it as a personal property, typically an owner-occupied property. Or you may do it as an investment property. Like I say, all of my previous properties have been properties that I financed, that I did via my LLC, via my company incorporation. This is the first time that I said, hey, I want to pay a smaller down payment percentage, and man, I paid for it. So let me explain. You have to have your last 2 years tax returns, your last 2 years W-2s, and a plethora of other information that the bank requires for you to have in order for them to finance a property for you. You put down a smaller down payment percentage, but because the bank is going to take on the bulk of the loan, they want to see a variation of documents. In my opinion, they want to see everything but your blood type. Nevertheless, we get into it. We began to go through the process. My mortgage lender, mortgage broker said to me, you know, that they're going to need my last 2 years tax returns. Okay, no problem. For whatever reason, the 2 years tax returns that I had didn't suffice. And luckily for me, the sellers of this property waited for me to file my 2020 tax returns. I found this property every bit of maybe 5-6 months ago. They waited for me to file my tax return. Well, I sent it to the mortgage broker before I sent it to the IRS, and I said, hey, will this suffice the way that myself and my accountant have it? He said, yeah, okay, no problem. We get into the process. The first thing that came up was we got to underwriting. Guys over there having a good time. We got to underwriting. And they said, hey, the PPP funds that you file for your business, if we take those funds off of the business, the company will show a red. The company will be in the negative. I say, man, it's not a company that didn't file PPP funds last year. Everybody had to get some sort of assistance. I don't understand. They also considered my year to date for this year, 2021. And of course, my company income is exceptionally well. Nevertheless, we got through that hurdle. We go through the process a little bit more, and they come to me and they say, hey, well, we need to get a few explanation letters for a variation of things, man. And it's like every other day they were coming to me and they wanted new information. Now let's break the numbers down real quick. This property is a 3-unit property. One of the units is currently vacant. I acquired the property as an owner-occupant. Means that it's 2 units that are leased, 2 units that are rented. When it's all said and done, the mortgage on this property will be about $2,300. The market rent for one unit is $1,250. The market rent for another unit is $750. That's $2,000. If you are decent at math, you understand that the property will generate $2,000 a month. The mortgage is $2,300 a month. That leaves a difference of $300. So the question on the floor becomes, can the purchaser, which is myself, maintain a $300 a month mortgage? I don't think I would have a problem paying the difference between the rental income and the mortgage amount. And that's essentially the question on the floor. So I couldn't understand for the life of me why they continue to borderline harass me for documents and borderline harass me for a plethora of things. Now, once again, I'm not particularly new to acquiring property. I've acquired several properties, right? And I understand that there are things that is often implemented for people that look like this that are not implemented for people that doesn't look like this, right? There's this thing of this discretion. That's the word. It's always someone's discretion as to if they will do things this way or that way. Meaning it's not the rules, it's not necessarily the criteria, it's discretion. And you want to know what determines which way they go? This right here. Every single time. This is the first property that literally stressed me out. Stressed me. I said a prayer, I say, God, you got to take this one. I can't do it no more. I'm done. I'm done. When you acquire property personally, not only do they want to see your closing costs sitting in the bank, they want to see 6 months of reserves. So that means if the mortgage is $2,300, I have to have that times 6 just sitting in my account. Now, for the average person that isn't an entrepreneur, for the average person that, you know what I'm saying, maybe, you know, they go to work every day, they do what they have to do, I find it just so hard to believe that the average person can freaking acquire a property. But then it hit me. They don't want you to acquire a property. Nah, for what? And then it hit me again. Sometimes you can actually be too overqualified. What am I saying? Because if the bank can't foreclose, that means they can't take the property from you and flip it over to someone else to run the sham on them for the next 10 years. And foreclose it and do the whole process all over again. It's so deep, man. It's so deep. It's so deep. And I just want people to understand that we have to go into these situations knowing that the odds against us. We have to go into these situations knowing that all our T's can be crossed and all our I's can be dotted. And we can still run the risk of being effed over. So we got to educate ourselves to the utmost. You've been following me online. You know that I'm a real estate investor. I'm a business credit consultant. Mr. Darren Finley, Flybook, SBU. Come check us out. SBU is Silverback University, the apes in the room. Don't forget it.